Welcome to the Trading Zone. I'm Joe Teague, just hanging out here waiting for Brian to jump in as we're watching the markets turning around this morning. Just kind of looking around here. You got the S&P 500 was higher by close to 0.5% pre-market. Now we're down maybe 0.33%. So definitely a bit of a reversal, some back and forth. There's big news going to happen this week. So I'm really excited to talk about everything that's going to happen going on. Seeing the NASDAQ hit a little bit harder this morning off of another bit of a reversal. Semiconductors down 1%, the SMH down a little bit more than that, actually, as I'm seeing it all come through in real time. We got the VIX up around at 20. That's pretty elevated for the VIX. Love having you. Love having you all here again every Monday. Remember, I'm here with you. Got any questions? Shoot them to me. Happy to answer them live as we're going along. It's really exciting to see the market every day, but especially to look at it with an options lens, to look at it with a volatility idea of what's going through here. So again, really happy to be here. Really happy to be watching these markets with all of you every day. What's going on in the big picture here? Got tariffs coming through. Yes, this is not a new story for this administration, but we're getting new tariffs going through with China. Interesting to see how that's going to push and pull everything. I think that is a big deal with these tariffs. How are they going to be able to handle? How are we going to be able to handle all these pullbacks and pulls? Anyways, what do you guys think? Let me know. Is this a big deal? We'll see as it goes through. We also got some new jobs coming through. I think that's actually a big story. I think that's good news for the market. Apple adding jobs to the U.S., taking jobs out of the rest of the world, bringing them back to the U.S. Certainly, that's very good news. That's probably want to be on the right side of the administration. It's not good for China with Apple recently, but I think Apple is trying to play their cards the best way that they can. The stock has had a really nice run lately. I'm actually looking at it right now. Apple bucking the trend. It's up today, so looking good there. Absolutely. Also seeing Google up today. So there are some techs doing well in the middle of this little bit of a rout here. So it's a push and pull. It's not all doom and gloom. That's to say for sure. Also saw last week breakthrough from Microsoft, and I got asked about it, what I thought. It's not exactly, this doesn't really portray my conversation I had with this reporter very well. She gives me saying, this is great news for Microsoft. They're going to go up immediately. It's not really what I was feeling with the news. I was saying, hey, this is cool. I love this. I love this long-term vision of having data centers with like quantum computer brain at the center of it. But that's not something we're going to see in the immediate future. I love quantum computing. I love the breakthroughs we're having with it. They're coming really quickly. But I think we're at the stage where we don't really have a workable, usable quantum computer yet. Hopefully we get one soon. Once we do, they're going to be very rare. These quantum computers are $30 million to make. These quantum computers are going to be in the Mag 7 companies, in the largest companies of the world. They're going to be doing some research for their own benefit. It's going to also go into universities. I think big universities will get grants to buy these computers. They'll do research for physics and biomedical gene studying and all that. So it is an exciting stage, but it's not. It's not going to be something that's going to move the needle one way or another when it comes to Microsoft's stock price anytime soon. Brian, welcome to the show. How are you doing this morning?
Great. Markets are flying around here, Joe.
I was just noting that we got a bit of a reversal this morning. Really, it was a weak end of the week last week. People maybe were expecting the market to open up down on Monday. and didn't really happen off of the futures indication. But then once the market opened, certainly we saw that happening.
Yeah, I mean, it's usually like we had such a big sell-off on Friday that it's usual that you kind of get like a little bit of a relief rally on the open, but they really smacked it down hard right at that 8:30 Central, 9:30 Eastern time slot market open. Markets basically fell almost 1%.
Yeah, and you know what? Big decline here in Palantir. A lot of people watch that. That's another thing that we follow very closely. A lot of the momentum names pulling back, of course. Maybe that's to be expected, but this isn't like all down. It's not, everything's not down all in unison, Brian. I'm seeing green from NVDA right now, still green in Apple, green in Google, Berkshire Hathaway actually doing pretty good. So there's plenty of stocks that are bucking the trend. It's not all down in unison. So it's not a definitive one way or the other sell-off for me right now.
Yeah, right. And now the S&P E-mini future traded below 6,000. The March future contract, it's bounced back all the way to 60.20. So bouncing around, maybe some opportunity for traders to sort of, reposition themselves. We've got some gamma on, Joe. I think maybe another move off of these levels here, 60.20. I see a 30 or 40 point move. I'm going to probably rebalance our deltas.
Yeah, and we were off last week for the holiday. The week before, Brian, we were talking about, hey, the end of February. That's a very seasonally weak time of the year. We looked at seasonality in the year of following an election when the incumbent party loses. You usually see the low of the year right at the first or second week of March. So we kind of are on schedule for that, just looking for seasonal weakness right here, looking to pick up going forward down the line. That said, I think we're going to have a big week this week in terms of news. I can't wait to get into it with everybody here watching in. We're going to be talking about SMCI. They got a big deadline due tomorrow. We're talking about NVIDIA earnings. Everybody wants to know about NVIDIA earnings. What's it going to do, Brian? We'll be talking about that. If you stick around to the end of the show, you'll catch that.
All right, so why don't we get into the full show here, as we got a lot to talk about, like you said. Let's get at it. I'm interested in hearing what's going on. This is Brian Stutland here of Equity Armor Investments, CIO, portfolio manager, here with my colleague Joe Teague. We give our opinions on the markets, and this is something we do every week here. You can tune in. The show starts live at 10 a.m. Eastern every Monday. We've moved to our new time slot, and we've got a great show here on the Trading Zone. Joe, why don't you kick it off, and what do we got going on?
All right, let's do this. We got a big week, of course. We got NVIDIA earnings, like I mentioned. We got the SMCI filing due tomorrow, like we mentioned. We also have some economic data. We got consumer confidence, GDP coming on Thursday. We got inflation data coming by the end of the week, and also a slew of Fed speakers. I can't list them all. Basically, all of them are going to be talking this week, so that could move inflation, or it could move interest rate expectations, obviously. So it's going to be a big week, but for me, it's really going to be all about NVIDIA. Now, the SMCI story might give a clue or a hint how NVIDIA is going to do, because their collapse at the end of last year really hurt NVIDIA. I think that the question about are these data centers real? Are they really coming? Is the demand really there? It's still kind of a looming question following the DeepSeek news. So we're going to get into all that. We're going to take a look at the Mag 7, or as Brian calls them, the Lag 7, as we go on.
It has been the Lag 7. That'll kind of be our main story, actually, when you break it down. DeepSeek news that came out at the end of January, really a big impact on those names. But really, let's get into where volatility is at. That's really our specialty. Joe and I have been traders on the floor at the Chicago Board Options Exchange, the CBOE, way back when, and our specialty was the VIX, and so this is what we watch all the time in volatility. And we're looking here at the skew. The skew being is the difference between volatility of the downside put versus the upside call. Calls give people the right to own stocks at some price, no matter how high they go, and puts are a protective insurance measure. It stops you out, or you can put a short on at that strike price level. And we look at this on the S&P 500 all the time, because we want to see the differential in premium and what traders are willing to pay for that downside put relative to the call. And we could see this sort of trend that's been occurring, making higher lows, sort of breaking out to a spike up to the upside. And it is probably a little overextended in terms of the aggressiveness of put buyers based on our models. to some degree, but we have seen this, when it's coming off these low levels here, Joe, and it just seems like it wants, or institutional traders want to see some sort of sell-off occur. They're definitely not taking that protection off just yet.
Yeah, and we're still kind of cautious here. We definitely want to see a confirmation of this going lower before we have any bullish like inkling for the market. Previously in recent little sell-offs, we're getting this like 7.5, 7 area where the skew is kind of topping out. Haven't really hit that yet right now. It feels like there's fear. It feels like there's a lot of volatility in the market, but it's not really coming through on some of the indexes. Actually, I think a lot of the volatility is happening more in the single names than it is in the index broadly. I think generally that's an interesting time period. We'll see how that plays out. It's not as much volatility in the indexes at large. Maybe that's a sign of some confidence for the economy. We'll have to wait and see. There's certainly some disagreement on the prices on a lot of these individual names, to say the least. And looking at the VIX futures curve, boy, they got elevated this morning. I took a snapshot right before we went live here, and these VIX futures got elevated. We saw when I started the show, Brian, the VIX was over 20. I think it was like 20 and a half. Came all the way back down to 18 and a half. Now we're at 19.15. So we got some volatility flying around back and forth as the market is flying around here.
I think what's interesting about this is the fact that the front month VIX future this morning finally went to a discount to the index itself. Basically over the last week, well, really February 14th was kind of the toppy part of the market, but we actually did see the VIX starting to make higher lows as the market kind of stuck around its highs. And every time we got a little bit of a sell-off, actually the VIX futures moved up with the VIX index itself, predicting that there would be another sort of rollover. Now this morning, we're actually finally getting the VIX front month VIX future at a discount here. And then if you look at where volatility were and the VIX futures were just a couple months ago, I think there will be some magnetic pull back down somewhere in that level. Let's call it like the 17 level in the VIX. But like we said, I want to see the skew index flip. I want to see call buyers come back to the market before I feel like VIX futures are going to, sell back off. But that would probably be, sort of a time slot. 17 and a half would be the downside price target when I'm ready to actually put that short on. But I'm not ready to call that yet because, Joe, you mentioned that skew getting up to that 7 area. We're not even there yet. So we could still see some volatility movement to the upside.
Oh, absolutely. So speaking about like the disagreement in price here that we're seeing in individual names, look at the Mag 7. Over the past few years, we know it's been the leader for the market, but this year it has not been doing so great. The market coming into today up, around 3% in both the NASDAQ and the S&P 500, but the Mag 7's down on the year, down 1.5%. Brian, what are you making out of this?
Well, it's interesting. I've mentioned before, basically January 27th, DeepSeek came out and they said, they've done this all revolutionized AI, LLM modeling for nothing, basically. And then all of a sudden we've seen this separation between the Mag 7 names and the S&P 500. Now, it's interesting here because these guys were the leaders and they've been the leaders for so long, for so many months. The question will be, and then they've actually really become a big part of the S&P 500. So the question is, if they're lagging, will the rest of the market get taken down with it? Will that start to lead to some heightened volatility? We probably want to break it down maybe further, Joe. I don't know. Maybe you have a chart that even pulls it back farther, how well this is done. There you go. The Mag 7 over the last couple of years. Joe, what do you make of that? It kind of looks like a little bit of a triple toppy, or just really can't get through this sort of like slight downtrend right here. Maybe it's just a wedge that's going to happen and shake people out before it can move higher. But does that worry you at all right there?
It's no, I mean, it's not too different than like how this looked here. It's right. It happens frequently in these charts. It's just going to come down to, are these earnings good enough to justify these high valuations? They have high valuations. It makes sense to consolidate when you have high valuations. It's way better to have a price correction sideways, going flat for a few months than it is down, of course. Now, we're going to have big earnings this week. We're going to stick around to the end of the show. We're trading that. I promise we'll get to that. I think the lion's share of these gains, Brian, have come from NVDA, of course. A lot of these companies are spending CapEx through the roof to make NVIDIA richer. So NVIDIA, it really is going to come down to NVIDIA. If it wasn't for all that CapEx expenditure, the company's going to made a lot more money, obviously. So we'll see. This week, this Wednesday, what's going to happen here if NVIDIA misses, or if they have a bad forecast, even if they beat, it's going to be able to forecast. If they have a bad forecast, if they're saying, hey, we're seeing fewer orders a year from now, I think the market's going to come back on that, because that fewer orders kind of unravels the whole narrative of the data center story. I'm skeptical of that. I think the orders will be fine, but it's going to be critical to me. I mean, if it turns out to be true that the orders are falling, then we're going to act accordingly.
Yeah, well, I think when you look at the Mag 7, there's a couple things in there. I look at Tesla, Amazon as consumer discretionary. We got a report from Walmart earnings last week. The outlook wasn't great, or at least shareholders didn't like it. That's a stock that's had a tremendous run to the upside, and it sold off pretty hard after earnings. So, is the consumer discretionary somewhat in trouble? Then you look at the rest of the Mag 7, and there's just more competition coming in. I don't think a lot of people are not talking about XAI, the Grok 3 that just came out, that is supposed to be bigger and faster, 3 times as fast, really, as some of the LLM models that are out there. And so that maybe is, hey, these guys are just running into competition. They've been spending a lot. How's it going to produce earnings down the road? Are they going to be able to recover all this? You're talking
about like the Microsofts and the Googles of the world, then. Yeah. Right. So there's maybe some software competition coming through. I think but for the Mag 7 broadly, that's kind of good. You get the expenditure on these data centers. It's going to be good for all of the rest of the economy. Still a lot of question marks there for me. So for me, NVIDIA is the key. NVIDIA is the key to the market, the Mag 7, everything. I can't wait for the earnings.
Yeah, so maybe it's just that, some of these other names are going to consolidate right in this like little wedge pattern. I'd be watching this index here. Joe, why don't you let people know what that index is? They can follow along with that Mag 7 index.
This is the Bloomberg Mag 7 index. It's BM7T. That's the Bloomberg Mag 7 Total Return Index.
Yeah, so watch that for a breakdown as making a lower low. That might be an indication that this wedge is going to break down to the downside and at least maybe test that 100 level. So we'll see where that goes.
Finally, just want to bring in yield here, Brian. Like, we've come off of these really high levels start of the year. So that's kind of a tailwind for stocks. We'll see if this can continue. It's kind of a push or pull. You get weak economic data, this goes lower. Strong economic data, it goes higher. But the strong economic data is, of course, good for stocks. So, but it's interesting to see. I think best case scenario is, the stocks do well on earnings wise, inflation comes down, and you can get like a double win. Certainly possible, not likely. Maybe be watching it closely though.
Well, we've touched about this though. The 10-year. I mean, when the interest rates come down off those highs here, it has been a tailwind for NASDAQ growthy kind of names. So maybe that'll be sort of a put on the market if the 10-year can sort of maintain below 4.5%. If it trends lower, obviously it would do that. Probably, like you said, weaker economic data, which is bad. But sometimes bad news is good news to sort of carpet shake people out. And then you get a turnaround and interest rates are lower, and that makes people feel like valuation should be higher. So there is some positive to that.
Just back in September, people thought the 10-year should be down here. We live in a different world from September, of course. We had the election, people were pricing in more growth, right? So they said, oh, more growth, we need to be up here. Now we're kind of looking at it again. Maybe inflation is not as bad. Maybe some of the trade war stuff is overblown. We'll wait and see. I mean, again, which is something to watch. I think it's good. I think this is actually kind of a crucial level, this 440 area. So
yeah,
we'll be watching that. That's kind of why I brought it up. I brought back my favorite chart from last year for a second, Brian, just to kind of look at the S&P 500 real quick. We obviously just got rejected here, like to get back into this trend line. It doesn't seem like it's happening. And it kind of feels like I'm a little cautious here. It kind of looks like Elliott wave 3 here. We got the first rally here starting, 3 years ago. You got number 2, and then you got number 3. Just got a lot less momentum now. I'm just questioning whether or not, we're going to come back down here and just come settle in here around this 5,500 area. maybe something like this previous level. So yeah, I'm a little curious here.
Well, I mean, like, kind of like you said, we're entering the seasonal time where the market can kind of shake out a little bit, especially when there's a new president in town, and policies are getting put into place, and people are trying to figure out what that's worth. And certainly, look at that support level there in the S&P that you drew, that little red straight horizontal line.
Mm-hmm.
That's probably something that I'd be watching. And right here again, this is like the 5,900 level ish. Feels like it should be tested. It just feels like it should be tested.
Yeah, and if we go back to like the election gains, I guess that would be around the 5,800 level. It just kind of seems like a little bit of stalling out happening here, where we were accelerating here and now just going flat here. So again, it's going to be a big week. I certainly think it's possible we break out up here. I'm ready for it. I'd love it if that happens, but I think I'm a little just cautious right here. Maybe a little pessimistic that we might see a little bit of a pullback before going higher.
Yeah, I would stay a little bit pessimistic until we see that sort of over exuberance of put buying in the S&P that we talked about, till we see, probably the VIX in the mid 20s, let's call it, or at least a big spike up in the VIX futures. And then that's where you could get that shakeout reversal back to those highs. But I don't know that we're quite ready for that.
Yep, great point. Same thing's kind of happened here in the NASDAQ. Just unable to maintain above here, and actually kind of a quick reversal. Maybe a bit of a rug pull, all-time high to lower. So not great for me. I'm just feeling a little cautious here.
Yeah, and then break it down further on the NASDAQ futures here. Yeah, again, 21,000, like that equates to the 5,900 in the S&P. It just feels like that level, that low in the middle of March kind of needs to be tested and recalled, and then see where the market can go from there.
In the semiconductors, more of the same. Actually, it's been like flat, since October here. So we've just been trading sideways. We'll wait and see. This is going to break out this week, Brian. I think we will either be below 240 or above 260 after this week. The two big events, we got the SMCI, we got the NVDA coming out. We are going to break out of this range, and that will decide the market for me.
Well, maybe let's use that to try and get into what NVIDIA is going to mean as our trade. People have been waiting for our trade of the week, Joe. Also, you mentioned SMCI, what that really kind of means for NVIDIA as well. And so why don't we get into that a little bit?
Yeah, well, waiting for NVIDIA. Please hang on just one more second. I promise you we got a trade coming here. But let's talk about the SMCI. That's the super micro computer. Remember, Brian, their last earnings report didn't happen. They didn't file an earnings report. Their auditor quit. They were saying, hey, they can't really, they don't agree with the principles that the management team has set forward. And obviously the stock got absolutely hammered. And there's been a lot of speculation. What on earth is going on with SMCI? Now, here's what's going on. They have till Tuesday by the close to release their last earnings report, or they will be delisted by the NASDAQ. They get delisted by the NASDAQ, pretty much game over. No one's going to want to own this stock. It's essentially a pink sheet stock. Now, they've been saying they're probably going to hit the deadline, so there's no reason to expect that they won't. I mean, maybe a little skepticism, but they probably will hit. So if they do hit the deadline and their earnings are in line with their results, the stock could absolutely skyrocket higher. The stock could have a huge run up. There's a lot of upside potential for it. I'll show you the chart in just a second. Now, if it reports and it says, hey, we need to go back and think about how we were previously making our projections, previously come up with our numbers, I think, of course, the stock might go down. Obviously, it has no report. I think the stock is just absolutely going to crater and plummet. So just, for me, I was thinking about all this, but I learned this morning, just researching the stock, it actually was previously delisted, Brian. So it previously had similar auditing issues, and it couldn't account for some of its earnings, and it was previously delisted by the NASDAQ. So that's just kind of a red flag for me broadly. Now, I kind of have some theories around what might be going on here, but let's just take a look really quickly at the price. I mean, we're really talking about below 20 if it doesn't if it has a bad report, or if it confirms that it was kind of being fraudulent, or 120 if it was as good a company as people thought last year. So there really is a huge potential gap here in this earnings. Now, I kind of have a theory, Brian. I don't know if this makes sense to you, but Super Micro is one of NVIDIA's largest customers last year. No, not so much anymore. They were buying a lot of these NVIDIA machines, and they make servers with them. They put them in servers. Now, there was just a question, well, who is the customer here for all these servers? Nobody really knew. One explanation is that, hey, they were just borrowing and spending money and pretending like they had a customer and they didn't really have it. That's actually the worst case scenario. That's some fraud. Or also a very bad case scenario is they were selling these NVIDIA computers kind of as like a second marketer, or they were buying NVIDIA and selling them to China or Russia, places around the world with sanctions. And they were using some fuzzy accounting metrics to hide those sales. So I don't think those are two good solutions for me. It's just kind of a very big, very, very big red flag.
Yeah, certainly. And you mentioned this is why we kind of wanted to bring these guys up to tie it together, because we're going to give a trade on NVIDIA. And if it's true that SMCI really is a big customer of NVIDIA, then they go away, they have issues. If the company survives, that's obviously a big boom for NVIDIA. If it doesn't, then, or something comes down the pipeline and against SMCI, that's kind of bad for NVIDIA earnings probably as well. So it kind of creates some uncertainty and just something, I would want to be watching how this stock behaves to give a clue more on really the big picture, which is our trade NVIDIA, which we really want to get into, because obviously earnings this week for NVIDIA, it's going to be something to be watching. The whole market's going to be kind of watching it. And this will be if, we put all these cautious things in place. Do we need to retest these lower levels in the NASDAQ and the S&P? Well, NVIDIA is probably going to dictate whether that happens or not, right?
Yeah, and not surprisingly, the options around SMCI are just astronomical. So it's just very hard to trade this. And by the way, just not really wanting to dip my toes into this level, but I am interested in trading NVIDIA, Brian, and let's fly into it. So there was some stories going on this weekend, hey, that Microsoft's canceling some of their data centers. The deep fake Chinese company news is actually true. You're not going to get these new people coming into the market. We're not going to need these data centers because you can do it a lot cheaper. That's kind of like the narrative. I don't necessarily know if that's true. And by the way, if it is true that they are rearranging some of their leases, it doesn't really necessarily mean that they're making fewer. Maybe it's possible that they're canceling a smaller one in order to build a bigger one. Maybe they're saying, hey, I actually don't need two in the DC area. I need another one in the Chicago area, or the locations of these things matter. So it might actually mean that they're building bigger than otherwise known. There is competition in this space. There's not only Microsoft, there's not only Google, there's not only Amazon, there's Qualcomm. There's so many people coming into this data center build. So it needs to be a lot more for me. I need a lot more information than just one guy saying, hey, I heard a couple of leases that are going south.
Yeah, and then to turn things over, I don't know if we have a chart here on the video. Well, let's just cap off like the recap here on valuations and when the earnings come out here. When you look at it, the forward PE, it's nothing crazy really. At 34 PE for a company that's been growing, year over year at astronomical rates. The question is,
can I just point something out here on the PEs?
Yeah.
Look at this this PE that was just like 2 years ago here. With this PE at 126, and that's kind of why it's like hard to look at these high PEs and say, hey, I can't own this stock, right? Well, I don't think there's a lot of people that don't want to own NVIDIA 2 years ago. So there's 126. I mean, there's crazy PEs like Palantir that might be a little bit different, but 126. I mean, the people had conviction this stock is going to go higher. Now we're back down here in the real world, and around the 50 area. So we'll see. Can we do that? Can the forward PE be right? I mean, it really is going to come down to the guidance for me. One more time. Look at these beats, Brian. Beat.
Yeah,
so
it
I
has.
think there's every reason to think
not,
they're going to have a good quarter. For me, it's going to come down to what is our guidance? What are we going to do next year?
Yeah, and just let's look at the implied volatility at like 7.8%. That's what's been predicted in the stock. So I'm looking at that, right? That's kind of normal, but that's a 1 standard deviation move. So in the options game, or in standard deviation terms, 1 standard deviation move happens about 2/3 of the time. The question is, does it make a 2 standard deviation move after earnings, which would put that at a 15% move both up or down? And taking a look at these chart here, Joe, if we can kind of draw like a little bit of a support line trend, you find that the stock is, 120 is a risk area, so to speak, right? And that would sort of represent a more than 2 standard deviation move. And so that does happen like 5% of the time, right? So is it in the cards? Sure, it could be. And that's why when I'm looking at a trade, I want to protect against that 2 standard deviation move to the downside, but I'm also willing to still continue to participate in this stock to the upside. So how do I do that? Well, I'm going to use options to echo this sentiment. I think on the weekly terms, it's very cheap to own a weekly option, but implied volatilities are pretty high. They're, somewhat above normal. That 7.8% implied move is, option markets are trying to price this correctly, but I think it's cheap enough. The 120 weekly put expiring on Friday is only 85 cents. So now I kind of have a stop out, right? Worst case, goes below 120, I can get stopped out of the stock. Here's the other beauty to it, where I actually could make money if it makes that 2 standard deviation move, because I'm going to use a call to echo my long sentiment in the market. And I buy a May 135 call for about $14.40. So market drops, the May call I can only take losses up to $14.40. I have none of the downside. So that then goes away. And maybe I can make some money on that Feb cheap put that I buy for sort of just the disastrous scenario on earnings to the downside. And if the market rallies up, I'll probably look to sell an option to reduce some of the cost of this May call that I originally bought. Maybe I'll even roll that up. We'll see how things shake out, what the earnings play. But this is I think a much better way to be long this stock going into an earnings play.
Yeah, I absolutely love that trade. Got the protection. Basically kind of stopped out here on a very short term on this earnings event, down at 120. Possibility for an upside gap. We know that's there. 150 was the high area here, so it's really priced in right spot on, Brian. So I think if tremendous guidance could put us north of 150, in the money on this trade already. And really poor guidance. I mean, this has been an area that has been support. Would be worried into this event that area does not hold. Yeah,
and listen, if you like this trade, you can go to equityarmorinvestments.com now, subscribe to our monthly subscription agreement. We have some really cool offers coming out if you open up a Tradier account. So some discounts to that to be applied for you. And, basically what this subscription does, it allows you to sort of follow along in our trade. You get an email sent directly to you every time we sort of update our trades. We also have 2 other strategies to take a look at that we've been pretty successful in the past. And so, feel free to go check that out, subscribe, follow along with our trade ideas. And, obviously we bring this once a week, but if you want updates, if you want the 2 other trade concepts, go on, check it out, equityarmorinvestments.com, subscribe. And Joe, I think that kind of, wraps things up for today. Any final last words before we sign off?
No, that'll do it for today. Thanks everyone again for joining us. Hope you have a good week. Hopefully we get a good result from SMCI and NVDA. We got the market higher, but I'm not holding my breath, and I'm ready for either outcome. And I'll see you next week.
All right. See you next Monday at 10 a.m. Eastern. Tune in for the live show, and then we jump right into our trades and everything else. So we'll see you next Monday. This is Brian Stutland here at Equity Armor Investments with my colleague Joe Tige here on the Trading Zone. Thanks to the MIAX for the sponsorship, and we will see you next week. Make sure you tune in to Tradier Hub every week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.